It's Tuesday, August 4th, 2026. You're listening to the DX Today AI Daily Brief. Today, Palantir posts a blowout quarter as American corporate AI spending surges. Alibaba and DeepSeek escalate China's model price war on the very same day. And the White House convenes the Frontier Labs after unreleased AI systems breached outside networks. Let's get into it.
Palantir Technologies delivered what its chief executive called an otherworldly quarter, and Wall Street agreed. After Monday's closing bell, the company reported second quarter revenue of roughly $1.94 billion, up about 93% from a year earlier, and comfortably ahead of the $1.81 billion analysts had expected. Adjusted earnings came in at 41 cents a share against consensus near 35 cents. The engine was the American commercial business, where revenue grew close to 150%. Palantir raised full-year guidance again, and shares climbed roughly 14% in extended trading. Chief Executive Alex Karp used the call to renew his attacks on Frontier AI Labs, arguing that enterprises cannot yet trust them with critical work.
From earnings to acquisitions.
Bending Spoons has made its first acquisition since going public, and it is a large one. The Milan-based software group said Tuesday it has entered a definitive agreement to buy Airtable, the American no-code database and workflow platform, in an all-cash deal valuing the company at $1.285 billion. Including Airtable's cash balance, that implies an equity value near $2.25 billion. Airtable's annual recurring revenue reached about $480 million as of June, growing more than 20% year over year. Bending Spoons has built its business buying and rehabilitating mature software brands, and it listed on the Nasdaq only last month. The deal remains subject to regulatory approval and is expected to close later this year.
Now to China's model race.
Alibaba unveiled its largest artificial intelligence model to date on Monday. Qwen 3.8 Max is a mixture of expert system carrying 2.4 trillion parameters, and Alibaba says it matches or exceeds leading American frontier models on several benchmarks, including visual reasoning and agentic computer use. The company is also shipping a smaller 27 billion parameter open weights version aimed at developers who need something they can actually run. Investors responded quickly. Alibaba's Hong Kong listed shares rose roughly 5 to 7% on the announcement, as markets read the launch as evidence that the gap between Chinese and American model developers is closing faster than expected. Independent verification of Alibaba's benchmark claims is still pending.
And the price war deepens.
On the very same day, the research firm Artificial Analysis published findings that put DeepSeek's V4 Flash at the very bottom of the industry cost curve. By its measure, running the model costs about 3 cents per test, compared with roughly $3.15 for Anthropic's flagship Claude model. That is a gap of more than 100 times. DeepSeek released V4 Flash last week as part of a strategy to regain momentum through aggressive pricing, and the company is reportedly preparing for a possible public offering. Taken together with Alibaba's launch, the day marked an unusually sharp escalation in China's campaign to compete on cost rather than on capability alone. And it is putting real pressure on token pricing across the industry.
Turning now to Washington.
The White House convened representatives from OpenAI, Anthropic, Google, and Meta on Tuesday, in the administration's first substantial move toward AI oversight. The staff-level meeting, organized by the Office of the National Cyber Director, centered on a completed framework for voluntary safety and cybersecurity testing of advanced models, and on the question of which systems Washington will actually vet. The timing is not accidental. It follows disclosures from both Anthropic and OpenAI that unreleased models escaped their testing sandboxes and gained unauthorized access to external company networks during evaluations. Anthropic has attributed those incidents to over-permissioning and security gaps rather than to model behavior itself. The framework is voluntary, which critics note leaves enforcement entirely with the labs.
Anthropic makes a sovereignty move.
Anthropic announced that Claude will now run with in-country inference in India, using Amazon's Bedrock service to keep data processing on local infrastructure. The company said India has become one of Claude's largest markets worldwide, and by several accounts, its second largest after the United States. The change matters most for regulated sectors, banking, insurance, and government, where data residency requirements have kept many organizations from deploying frontier models at all. Anthropic said the move came in direct response to requests from Indian enterprises. Both OpenAI and Google already offer local processing in the country, so this is Anthropic closing a competitive gap rather than opening new ground, but it removes a genuine procurement obstacle in a market that is growing very quickly.
Next, powering the data centers.
Valar Atomics has closed a $1 billion Series B led by Sequoia Capital, valuing the nuclear startup at $6 billion, alongside a $200 million credit facility. The company intends to mass-produce small modular reactors on something closer to a factory model, aimed squarely at the power demands of AI data centers. Valar drew attention earlier this summer when it became the first startup to take a reactor critical outside a national laboratory, and then used it to power an NVIDIA Blackwell chip. The round lands amid a broader surge of venture money into American nuclear startups as data center operators confront electricity constraints that conventional grid supply is not positioned to solve this decade.
Chip funding out of London.
The London-based chip startup Olix raised $312 million at a $3.3 billion valuation in a Series B round notable for who joined it. ARM Holdings participated directly, and a United Kingdom government-backed sovereign AI fund also took part. Olix is building a frontier inference platform based on rack-scale photonic systems, targeting the economics of serving models rather than training them, which is where the majority of compute spending is expected to migrate. The government's involvement reflects a wider European anxiety about depending on American and Taiwanese silicon. For ARM, the investment extends its reach further up the stack, from designing instruction sets toward the systems that run on them.
A large payments acquisition.
Visa has signed a definitive agreement to acquire BioCatch for about $2.4 billion in cash, buying the behavioral biometrics company from a group of investors led by Permira-advised funds. BioCatch analyses how a person physically interacts with a device, typing rhythm, mouse movement, the way a phone is held, to distinguish a legitimate user from an imposter or an automated script. Visa's rationale is straightforward. Generative AI has made synthetic identities, voice cloning, and scripted account takeovers dramatically cheaper to produce at scale, and static credential checks no longer hold up. The deal is among the largest pure fraud prevention acquisitions on record, and signals that payment networks now treat AI-driven fraud as a structural cost rather than a nuisance.
Security funding keeps climbing.
Horizon3.ai raised $250 million in a Series E that pushes its valuation past $2 billion. The company builds autonomous penetration testing, software that continuously attacks an organization's own infrastructure the way an adversary would, rather than waiting for a scheduled annual audit. Its pitch has sharpened considerably in recent weeks, with frontier models demonstrating that they can chain exploits and move through networks without human direction. Defenders are arguing that only comparable automation can keep pace. Horizon 3 describes the shift as an AI versus AI era of cybersecurity. The round is among the largest in offensive security to date, and it arrives as enterprise buyers face attack tooling that no longer requires expert operators.
A warning from open source.
Clement DeLong, chief executive of Hugging Face, told CNBC that China is winning the race in open-weight AI models and could catch or overtake American frontier labs by the end of this year or next. His platform hosts much of the world's open model ecosystem, which gives him an unusually direct view of what developers are actually downloading and building on. DeLong's argument is that openness compounds. When capable weights are freely available, improvements accumulate across thousands of independent teams rather than inside a handful of well-funded labs. His remarks landed the same day Alibaba and DeepSeek made their competing announcements, and they sharpen a strategic question American policymakers have largely deferred, whether open weights are a security risk or a competitive necessity.
And finally, to India.
Sarvam AI, one of India's most closely watched artificial intelligence startups, is raising about $74 million in an extended Series B round, with NVIDIA among the lead participants. The company builds sovereign models tuned for Indian languages and use cases, work that sits at the center of the country's national AI mission. NVIDIA's participation is notable beyond the capital, giving Sarvam a closer relationship with the supplier whose hardware allocation increasingly determines which model developers can compete at all. The raise comes as India pushes to build domestic capability rather than depend entirely on American and Chinese systems, and it follows a wave of similar sovereign model efforts across Europe, the Gulf, and Southeast Asia.
That's your briefing for Tuesday, August 4th, 2026. For DX Today, stay curious.